Constellation Brands is a global manufacturer and marketer of wine, spirits, and beer, with a wide range of brands including Clos du Bois, Ruffino, Robert Mondavi, and SVEDKA vodka. The company also owns the rights to brew and market Modelo Mexican beers, including Corona, here in the United States. As the largest wine company in the world and the third largest beer company in the U.S., Constellation should continue to benefit from economies of scale. So, let's take a look. John Stazak, an analyst with independent research firm Argus Research, has a positive view of the recent additions to Constellation's brand portfolio and increased share of the U.S. beer market. Argus Research also has a positive view of Constellation's above average margins. Company results over the past decade reflect key industry trends. This includes faster U.S. sales growth for premium beer, an increase in global wine consumption, which favors sale of more expensive wines, strong sales of premium spirits, and the consolidation of suppliers, wholesalers, and retailers. The company has a record of good growth over the past several years. The company has posted compound annual revenue growth of 7%, operating income growth of 25%, and earnings per share growth of 20%. This growth has been driven by the launch of new brands, as well as by changes in the business portfolio. As an example, Constellation completed the acquisition of Premium Wine's Prisoner Wine Company brands in 2016. Prisoner Wine's volume has grown 30% over the last 3 years. As another example, Constellation acquired High West Distillery. The brand portfolio of High West includes American straight whiskeys and other spirits. As such, the acquisition enabled Constellation to enter the lucrative market for premium craft whiskey. Also significant is that in October 2017, Constellation raised its interest in Canopy Growth Corp. Constellation is partnering with Canopy to develop a drinkable marijuana product. It hopes to sell the drinks in Canada in 2019 when marijuana is expected to be legalized for recreational use. The company does not currently plan to sell any Canopy products in the U.S. So, let's go take a look at our charts. And we're now looking at a 20-year monthly chart on Constellation Brands. The symbol is STZ. The recent price was 197.16, midday trading on Tuesday. For disclosure purposes, I do not hold any shares of Constellation Brands at this time. Now, since about 2012, this price chart has had a rocket ride all the way up. Now, we had this consolidation here in late 2018, early 2019. It's bounced off that, ran right back through the 50 EMA, and up and tangling with a 20 EMA right now. It's having a slight pullback from this level here. Now, this slight pullback I really like, and let me show you why. Into the MAC. This is one of my favorite types of formations, and I've talked about it many times, where we do have a top in the MACD with the fast line running very fast, hard through the slow line, all the way down, back, resetting there at the zero line. Now, because of the distance between the fast line here and the slow line here, the MAC had to travel sideways, more or less. Now, at this point here, it came up through, the fast line came up into the slow line, but got reflected back. So you can barely see that perhaps here in the histogram. From that bottom there, it had a good run up here, but it has a little bit of stall or reflection at that point. I like that. What's happening is that you had all the sellers all the way through here. You got some buyers coming at this point here. Now, right at this level, What's happening is that you have some sellers that are not quite sure what they're going to do, and ultimately some of these sell off and you get rid of the last sellers in the stock, and then the stock is ready to run. Let's go here. You see the price rate has changed. That bottom in that point there, the move up, and then just a slight downtick. So the downtick may move it to the slow line. Once the slow line kind of comes through there, this downtick may come to there. It might go through. It doesn't really matter. What's happening is the evolution of those sellers getting out of the stock because they don't have belief in the future. Now, again, the bottom, the move up, and then this slight reflection back down to the mid-level or the 50 line. And I think it's going to turn again and run soon enough. Here you can see the same thing. And then also in the Williams. Hasn't gotten up to that overbought territory, which is going to be the next step in my humble opinion. Moving on up here, again to the price chart. This is a fantastic chart from 2012 all the way through here to 2018. I love this reset in the price and in the oscillators. It did come up, so you could say that that's easy money from this point here up to here. I say that's very hard money. I say the easy money is going to come pretty soon because the risk seems to be getting wrung out, and you saw that in all of the oscillators. So, as usual, please conduct your fundamental analysis. But as the charts go, I love this formation. And for today, that's ChewDog Charts. Thank you.